video explaining how we can use divergence to our advantage in trading. Okay, so right now I'll be doing this. So first of all, what is divergence? Looking at the chart very well, you will see that the market is going in a certain direction, but we cannot spot this without using our technical indicators. So in order for us to spot divergence in the market, you need both the price action and our technical indicator. And one of the technical indicators you can use to spot divergence is the MACD. You can also use the RSI, the relative strength index. You can also use stochastic indicators, but for the purpose of this video, I will be using the MACD because that is what I use basically to spot divergences. So you have to add the MACD indicator to your chart, and you can use this, okay, as settings. So I wouldn't stay so long on this. Copy these settings. So this is it, guys. If you zoom your chart, you can see what I'm saying. So what is the divergence? You spot divergence in the market when price is going a certain direction and the indicator is indicating a different direction, meaning they are going diverse ways. They are not saying the same thing. So right here we have price making lower lows and lower highs. Okay, price was coming down from this point right here. If you look at the crosshair where I'm pointing, and price has been doing this up and down movement, and it got down to this point where we are right now. And you see, while price was doing that, sorry, I didn't mention that I'll be using this chart, the boom 1000 index H1, for this illustration. I actually like the movement on it. It is also applicable on forex. Okay, so I can use any of these to illustrate because they are all forex. The difference between this and that is that, okay, the forex as we know it is about trading foreign currencies. Okay, the foreign pairs, the Euro USD, GBP USD, major pairs, exotic, and the rest. So for this is synthetic indices, and I'm using this chart for illustration. So it is applicable in every other chart, including the forex chart as well. So right now, I said we needed the technical indicator, the MACD, and we have the MACD right here on our chart. And the next thing, we want to spot this divergence. So right now, price was doing lower lows and lower highs, which is actually what categorizes that is the characteristics of, or the feature of, a downtrend. Okay, when the market is doing this, you have price doing this, lower low, lower high, lower lows, lower high, lower lows, lower high. Okay, and then suddenly price does something like this, for example, and fails to make a lower low and decides to do this and start creating a higher high and a higher low, changing direction. And then you see that market was doing this, coming this way, and instead of the indicator coming this way as well, you notice that the indicator is doing the opposite. So instead of doing that, the indicator is doing this instead at this very point. Okay, so I can't draw that perfectly, but the chart has it perfectly. You can see this price came down, went up, came down, and gave us this downward movement, while MACD was giving this move up. Okay, so that is where we are spotting our divergence. So I am going to mark this. Okay, so that is what a divergence is, looking at this chart. Now, how do we use this to our advantage? Okay, how do we use this to our advantage? Even on the H4 chart, you can see that price was doing this from this very point. From this very point, price was coming down, while here price was doing this other movement in the opposite direction. So if we were to stick to the H1 time frame, okay, you can see that price was going that way and then this was going up. So now how do you use this to your advantage? Now, I had explained before this movement happened in the previous video. Please, if you haven't watched it, go back and check the previous video, okay? You can see that whenever there is a divergence in the market is actually informing you that price is going to be changing direction soon. Probably the market is going to be reversing. And then I said in the previous video that I'm going to show you how to actually make use of how I use the moving averages, okay? Why I like to use the moving average to trade. And also I'm also going to put the moving average right here again, okay? So we're going to bring back the moving average that I used previously. I'm going to be using the green and I'll be using 4 pixel, okay? So I also like to add the 200. The 200 gives me the direction of trend on bigger time frame. Okay, that is H1. The 200 will let me know what price is actually doing on the bigger time frame as well. So, like I said, you cannot spot divergence without using indicators. So right now we can see that price was coming from somewhere and it got down to this point. And now price started informing us that market. I had mentioned also that it is not every time you spot divergence in the market that it goes far, okay? Many times, okay, it doesn't go as far as you would have expected it to. So on this chart, you can see that while the market was telling us it is selling, okay, the MACD is telling us it is buying. So after that, you can see that there was price action around this zone. And if you check very well, the weekly time frame, okay, the weekly time frame has informed us that price was also in an uptrend. I will need my data on right now for this. So you can see that price was also trending upward, but then coming down. Okay, I will also need one moving average, the 20 moving average. So our 20 moving average, I said something about when price leaves, okay, when price extends without leaving the other moving average behind, lagging behind. So if you can see on this chart, you will see that price came down without the 20 accompanying it. Price came all the way from here down, broke out of this place without accompanying it. Okay, so it gives me a clue that there's going to be a pullback in the smaller time frames soon. And then when you see something like this happening in a very controversial zone like this, in a very in a strong psychological zone like this, psychological level, price has just visited previous support level at the weekly time frame. This is a very strong zone. And then you're wondering why this price also did not move with the moving average. Rather, it stretched out and then left this gap between these points here and this point. Now, having seen that, what I usually do is I will drop a horizontal line right there and then move over to a smaller time frame. Going to daily, I will check the distance. You can see the distance. This is where we marked. You can see the distance between price and the 50 as well. This is a strong indication, guys, that this market will be reversing any moment. And then you move over to the 4 hours chart. Sorry, guys. You move over to the 4 hours chart, okay? And you see this. I had done this video before this movement, so price is almost getting to where I had targeted it. So you can see this is H1 and price is moving as expected, okay? So if you didn't see the previous video, please look for it. Okay, so this is it. how do you now take advantage of this? I said, first of all, the bigger time frame is at a strong zone, a very strong psychological level, the support zone on weekly. And then H1 is giving you a clue that the market is going to pull back by giving you divergence. So guys, divergence now helps you to begin to look for trade opportunities in the opposite direction, because it seems already that price is not going to move further, downwards. And then you see that after market has stretched to this point, all the way from here down here, okay, and then right here down here, you can see that price was also doing the same, going up in the opposite direction. And then you see price action around that zone. You see a rejection, okay, you see a rejection. This is a candle that rejected. This is a candle that left a wick right here and then gave us a very strong bullish candle. Then after you've seen that, you have to start looking for opportunities to buy. And now looking at this, okay, we'll have to get to look at other factors. Now, considering what I have been teaching you guys concerning my strategy, okay, you can see that the MACD has crossed also for a buy as well. The MACD has crossed for a buy, meaning that it is time for this market to begin to go up. It is time for the trader to start looking for, okay, trades in the opposite direction. Sorry guys, so this is it. Price has started giving you a clue that you should go up. Now what's the next thing? The next thing you see is this zone was marked before this happened, as that when price stretched out of this point, as that when price went up to this point, okay, that was when this was marked, okay. I dropped this horizontal box, this rectangle box here, waiting for the price to pull back to that zone. And then once price pulls back to that zone and gives me a price action, a bullish price action in line with what this MACD is saying to buy, this is when the trade is supposed to be taken. This is where you take your trade. This is a bullish candle, okay, that touched a previous resistance that has now become a new support, okay. This point has become a new support. This zone, price failed to break below this point, and so it a new high and then a new low, and this low was higher than the previous low. The very low became the new low, and then this high became the new high, and then this previous resistance now became the new support. So this is what I mean. Price came down to this low, created another high, and failed to come down here. Instead, price came down, went up, stopped somewhere here, broke out of this point, came back to retest the previous zone. And this is a resistance zone now turned support. So when you see something like this, you know that market is going to pick up from there. And so that is exactly what the price did right here. After retesting this zone, okay, it gave us a bullish candle and then began to go up. So guys, this is how to take advantage of, divergence when you find them. After you spot a divergence in the market, begin to look out for, if you are using the MACD indicator, okay, the way I'm using here, begin to look out for signal in the opposite direction. And then when you see the signal in the opposite direction, look for a retest in any of these zones, any of the supports or resistance zones, depending on what you're trading. And then for the fact that you saw it's a divergence does not mean that it's going to go far, because something like that happened there, but it didn't go far, okay. In this case, it stopped halfway, okay, and reversed. It didn't really go far, okay. It stopped halfway and then continue coming down. That is why whatever strategy you're trading, you have to use proper lot size. You have to manage your account properly so that you don't lose it, because many times divergence can happen severally. But one thing you should know is that once you see a divergence like that, the first sure profit you can catch from that market is usually the very first swing. Like what happened here, there was divergence here as well. And when the price action happened here, it pulled back to the previous main support because it was a downtrend. For me, this is supposed to be the very first take profit zone until price gives me another proper price action. I wouldn't take this trade anymore. Once you see price begin to trend downward again, you have to, of course, resume the trend until proven otherwise. So you don't trade divergence in a vacuum. You have to combine other factors. You have to factor in other considerations, other factors before you trade it. So there are many ways to trade divergence. As you can see that right here too, it was actually making higher highs, while down here it was making lower lows. Okay, so you take advantage of this. After it broke out of this zone, it came back and retested the previous resistance, just like it happened the other way, and then price began to come down. So you can also use the moving average. Like I said, moving averages serve as dynamic support and resistance in the market. So the market is actually filled with many supports and resistance zones that can get you confused. But when you have the moving average on your chart, it helps you to actually have a focus on what support and resistance you should focus on. Okay. And don't forget also, for the fact that you are trading technical indicators does not mean that you should not acquire the knowledge in price action trading. So if you haven't acquired knowledge in price action trading, I will advise you to go in depth, get materials, study, get mentorship, learn. There's a whole lot to learn in this market, in this business. You have to learn before you can earn. Don't just jump in and do anything. You can take your time out and look at the charts. This is another example right here. Of divergence and how you can factor into your trading and help you catch reversals. So this is how you know the market is reversing, and every time it does that, it will always give you a clue, a retest on any of the levels. And this was a retest that gave the continuation downwards. After it created that, it gave a retest down. So after every divergence, look for proper retest. Look for a proper retest that tells you that the market is going to change. This is another divergence right here. This is the market coming down, and this is the market going up. And after it went up, of course, they marked this spread out here for a buy. And when it did that, there was a retest in one of these levels, and there was a retest around this zone, and that was an entry to buy. So this is how to take advantage of divergence in the market. After it does the divergence, begin to look out for possible retest. Look out for retest. That's how to trade it. Don't just trade it in a vacuum. So that is how you can actually trade divergence in your favor. How you can take advantage of trading divergence in the market. First of all, don't forget the rules. Always remember to do a top-down analysis. Go and find out where that divergence is happening. Check if it is a strong zone or not. Like what we had here, it was actually a strong zone. Sorry for all of this marking on the chart. I had to use them, to remind me of what is happening in the market. And so that is it. And this is our price, going up as predicted. If you didn't watch this, check the previous video. It was predicted before it began to go up. So I am not saying what I don't know. I'm actually telling you what happens. It is left for you to practice it. Check it out, and you can add it to your watch list as well and improve.